If a company keeps making losses, it is worth $5 only. Whosoever is buying, it doesn't matter. God comes to buy, then also it is worth $5.
No, but
Say Rakesh Jhunjhunwala's one single achievement is what?
yeah.
He bought Titan when he
Titan at
must
the
have
right
been
time.
definitely mid-cap, if not a small cap at that point of time,
Yeah.
maybe mid-cap at that point of time, to become top 10, 15 companies of India. So you must understand, if you raise the prices, supply will come. Asman se supply hai. Whether FIs sell, promoters sell, block deal happens, new issuance come, supply will come. See, there is a thing called Anlom Vilom in yoga, isn't it? You keep breathing and then you have to breathe out also.
Yeah.
It is necessary.
Yeah.
If you don't breathe out, can you keep breathing up?
No.
You cannot. Markets are like that.
Yeah. Hello and welcome to a very special edition of Market Cafe. I'm your host, Surabhi Upadhyay. The financial year is finally drawing to a close and markets have had a bit of a rumble, perhaps the first little correction that we've seen in mid-caps and small caps in a long, long time. People are slightly confused, wondering what they should be doing with their portfolios in the longer-term wealth creation journey. Well, my guest on the show today perhaps very rightfully calls himself a grandfather in the Indian stock market. And why not? He has spent 40 years in this market and he's literally watched the country's stock market explode in the last 4 decades or so. And today he's going to tell us why we investors should not get too fixated about this distinction between large caps, mid caps and small cap stocks when it comes to long-term wealth creation. Let's go and meet Mr. Raamdeo Agrawal. Raamdeo ji, it is such a pleasure to be here with you in person, in your office, and I'm really looking forward to this conversation.
Thanks for coming.
It's going to be you unplugged literally on Market Cafe today.
Yeah.
So it's great to have you here. Let me just start by asking you, the financial year is also coming to an end now.
Yeah.
So how has it been? Saal kaisa raha hai aapke liye, professionally,
Couldn't be-
personally?
yeah,
What
yeah.
thoughts?
Couldn't be better. First thing is that my health is very good, very
Lovely,
stable,
lovely.
very nice. And so that is like 90% of the story.
True.
And 10% wealth has been taken care of the market. Markets have been fantastic.
Yeah.
Mid cap, small cap, large cap, everything is roaring.
Yeah.
So I think we couldn't have had a better year for the investors at large. Number of customers coming in, the kind of participation we have seen, turnovers across the market segments have just gone through the roof. Inflow into the AMCs, inflow into the wealth management, iBanking deals. I mean, we are into all kinds of capital market businesses, and that is what is doing very well. It's actually booming sector, and I think we are into a very long haul in terms of this boom. It's just very nascent, I would say.
Okay, I know you're very, very bullish about the capital market sector as a whole, and what it really brings, and the kind of investment opportunities it also throws up. We'll talk about that as we go forward. Now, I just want our viewers to know the theme for the show today. What Raamdeo ji has decided to focus on is why perhaps as investors we should not get too fixated with this whole sort of bucketing between large cap or mid cap or small cap, and which stock should I buy so I get great alpha and great returns in my portfolio. That's right. We'll talk about breaking away from the shackles of market capitalization. Is that right?
Yeah.
Okay.
So basically, investing is not about, you don't look at the price first. When you invest, you look at the value first. I mean, if you go to buy, say a watch, I mean, price you'll ask is last. I mean, if say a brand is there, in that there are 20 watches starting from say 10,000 to 10 lakhs. But the tag is not there. First you will see which one you like.
True.
First you like it and then you ask for the price. And you thought that it might be worth a lakh and it turns out to be 10 lakhs. Then you say, boss, this is not my budget. Or this is not what I'm looking for. Then you go and look for something else and you say, okay, this fits in and this is allowable. You thought it is worth 3 lakhs, but it is allowable for 1 lakh. You go and buy.
It's great value.
Great value. So that is how investing is being done, as simple.
Okay.
But this entire starting itself, mid cap, small cap and large cap. So, investor is, I think it's too much of noise about this cap thing because of this is the only unique market where this categorization is very, almost legalized. That you are a large cap, you are a small cap and mid cap.
Yep.
Yes, these concepts are there. Like in US, I think about 200 million to 2 billion is a considered as small cap, and 2 billion to 10 billion is considered as mid cap, and
Mid-cap.
beyond that everything is large cap.
Sure. It's also a
You
big
know,
market. It's a liquid
Yeah,
market.
and the
developed
large
market,
cap,
yeah.
see, when you are a $25 trillion market, see now it is a $50 trillion market. The definitions are not changed.
True.
So the top 100 is not large cap there. Anything beyond 10, $20 billion is large cap. So if the half the market is beyond 10, $20 billion,
So be it. So be it. So, you know, this conversation is also happening at a very, very good time, perhaps,
Yeah.
because this whole business of mid cap and small cap, and whether mutual funds are getting stressed, whether there's too much money going in these funds, all of that, I mean, I think coupled with other factors, it also led to a bit of a small correction. So we've actually got lots of questions. I've sort of
Yeah,
asked people
Yeah.
what they want you to answer. So I'm going to, take the liberty of bringing in some of those questions. And let me start with the first one. This is Deepak. Deepak is saying, is the mid-cap scare over, or is there more expected? I'm invested in a few mid and small cap names in small quantities, and I'm sitting on a loss. So I don't know what I should do.
Yeah. See, if it's so sad. I mean, just to say, I mean, the company has no name. It's only mid cap. I mean, how would you say that? You know, I mean, I'm a Punjabi guy, but you must explain what exactly you do. You are an engineer. You are a scientist.
True.
What you are. So
True.
I think underlying value is completely being ignored.
Yeah.
You got to, if you're a mid cap, but you are earning say 2,000 crores, and if P multiple is 10, and say 15 to qualify as a 15 P multiple, 2,000 crores you are earning, your ROE is say 100%, 80%. How do you care? Let the market. In fact, the investor's journey is that if he is really successful guy, he must buy a small cap, which becomes very large cap.
Absolutely. No, but
Say Rakesh Jhunjhunwala's one single achievement is what? He bought Titan when
Titan
he
at
must
the
have
right
been
time.
definitely mid cap, if not a small cap at that point of time, maybe mid cap at that point of time, to become top 10, 15 companies of India.
Yeah.
So that journey has to happen. But he didn't buy because it's a mid cap or anything like that. He bought it because he saw value in that, deep value in that. So I would urge that everybody should forget about mid cap, large cap, small cap, and see if you're a small guy, you'll understand in small companies. It is very difficult for a small starting guy to understand complexity of Reliance and Telco and Tisco and all the हजार businesses of the sizes the numbers will not get into your head. How will you understand the value?
So what you're saying is that don't get bogged down by market capitalization.
Yeah.
Look at value of the businesses, but you're not saying buy more large caps and less mid and small
Again,
caps.
you are
That's
asking
not
the
what
same
you're
thing.
saying.
No,
Yeah.
you must look at the opportunities.
Yeah.
What is the process of investing? My process of investing is I look for trend. Where exactly that big delta is going to happen? Okay.
Yeah.
Say, okay, in capital market, this big delta is going to happen because I'm close to it. I can see that big delta happening. I'm giving an example.
Yeah.
Okay, now, but just knowing the trend doesn't help you. Then you go and figure out which are the companies in that
That'll
particular
benefit.
category.
Yeah.
Okay,
Yeah.
then the companies will come in all sizes and steps, right from very large, say, a capital market company or AMC, which might be 1 lakh crores, 75,000 crores,
Sure.
to as small as a broking company, which might be 500,000 crores.
Let me ask you this, because you spoke about capital markets, and I know that your fund managers in the PMS have quite a few stocks, reflecting this sort of belief that you have. You have, I think, BSE, Angel One, quite a few of these companies that are linked to the wealth creation process in the country. I think the thing people grapple with is trying to understand fair value and good value and undervalue, because
But
these
they are
stocks
there
have
in the
rallied.
they are in the stock not because they are small cap, mid cap, or large cap. They are in there because the fundamentals or underlying value,
Sure.
their understanding of
Sure.
value
Sure.
is way below the way above the price it is quoting at.
So okay, since we're on the subject, what about valuations for some of these businesses? I mean, these are like sort of your peer companies or exchanges or asset managers, etc. Because in many cases, the stocks themselves are up 200%, 300, 400%, and then you have a market correction coming in, and people get confused.
Yeah. But
so what's good value for,
I
for
cannot
the
talk
capital
for the
market
people.
business?
I can talk for my managers or what we are doing.
Sure.
What is our understanding of things?
Yeah.
See, there is a thing called Anulom Vilom in yoga, isn't it? You keep breathing and then you have to breathe out also.
Yeah.
It is necessary.
Yeah.
If you don't breathe out, can you keep breathing up?
No.
You cannot. Markets are like that.
Yeah.
Every stock, every sector has to breathe up, and then after a big rally, you have to have a good correction. Sometimes corrections are immediately after small rally.
Sure.
Sometimes it's after big rally. But correction is extremely necessary, essential part of the stock market movement.
True.
You have to take it for granted. And that is why it is called risk asset. It can be up, it can be down.
Sure.
And that is what is not being liked by the investors at large. You have to understand it is integral. This is quotational losses. The corrections are quotational losses. They're not losses. They are quotational losses. You have been overpaid. 100 went to 200. You have been overpaid. Don't take it, you are paid. You are still in the stock. You should have got only 160. So 200 has to come to 160. But it will not come to 160. It will come to 140. Because market doesn't have very precise way of giving a price. It is very approximate machine. It will go 5 steps up, 4 steps back, then again 7 steps up, then 4 steps down, like that.
So, recently, in the recent past, words like froth, etc., were being used for the broader market, mid and small cap. Do you believe that there's
of course it was
froth,
there.
and you believe more correction has to happen?
What is happening is, you must understand the factors driving the market right now. Factors are the number of investors which are coming in. After 75 years, first time we are saying celebration of retail investing or celebration of stock market. Okay, thanks to digital infrastructure, thanks to KYC norms being eased out, and generally the mandate by government that capital formation in the country is extremely important for the sustained growth in the future. Okay, now that equity, see, for a country to grow or enterprises to grow, job market to grow, you need enterprises to grow. Enterprises will grow only if you provide them adequate quantity of equity capital to start with at reasonable prices. And then debt capital is there. Once you have the equity, then you have the debt. But without equity, there is no debt. So the show doesn't happen. So clearly, this is happening. We are getting about 4 to 5 million customers every month. And this is a record. From 35-40 million in 2020, we have reached last month 150 million. I think we are headed straight to 300 million. 300 million, and then it's a revolution. And it is not going to happen overnight. It is going to take 3 to 4 years. And then after that, after 300 million, let's first reach 300 million. Then we'll talk about 600 million. Okay. Now what is happening is the pace is accelerating. Instead of going down after 4, 5, 4 and then 3.5 and 3, it is actually going from 3 to 4 to 5. And now, let's say we have done 4.65 max. I don't know what is the number for March. But my sense is now, initially there were only 30-40 million customers satisfied. So they were bringing their brothers and sisters and all. Now 150 millions are satisfied. So the whole society after society is coming in. Like the whole city is coming, whole township is coming, whole building is coming. So now there is a lot more movement and acceptability of the concept of investing some portion of your savings. See, last year, between in 23-24, as of this Friday, the number came. We have collected about 17 lakh crores of fixed deposits. Bank deposits have grown by, I think, 13% and 103. So I think 17-18 lakh crores have come. I think stock market must have got during the same period about 3 to 4 lakh crores, maybe 5 lakh crores. So only 1/4 or 1/3 of the fixed deposit. That is not the right thing. Eventually, it will become almost equal. But that may take 5-7 years. So it is we are into midst of very huge market. What I would say, savings allocation change in the economy, and this will happen. It will take time, and economy has to also perform. See, just by bringing money, the show is not going to happen.
Exactly. People are coming because at the end of the day, they have seen what has happened from March 2020. And a lot of the retail investors, there are a lot of new time people who've come to, new age investors who've come to the market, right? They've not seen cycles, they've not seen a meaningful correction. Does that bother you at all?
No, it doesn't bother me because the color of money is same. Whether you put it as a professional or some new guy puts it. The issue is that overall aggregate money, where it is going. Is it going into the building of the infrastructure? Is it going to build the corpus? I mean, is it a primary issuance or is it a secondary? Like ITC BAT taking away, say, $3 billion or $2.5 billion. That doesn't help that much. Or Indigo promoter taking away $1 billion, that doesn't help. Of course, it is necessary part of the capital market, but disproportionate amount should go into the primary issuance. So like a telecom company issuing, say, 50,000 crores worth of bonds or equity, and that being subscribed. What they will do, they will go and put up new towers, that will actually spur the economy.
You know, it's really interesting that you brought up some of these huge block deals that have happened, and a lot of them have happened. I think 2023, we saw massive blocks coming in. It's continuing in 24. And this is also a question that comes up because at the end of the day, because of the retail revolution, a lot of the buyers are mutual funds. So, I mean, I am buying at the end of the day when maybe a promoter is selling or maybe a very sophisticated
That's
PE
fine. They also
investor
have
is
right
selling.
to sell.
They have a right to sell, absolutely. But is there any reason to worry because they are supposedly smart
There is
insiders
nothing to worry. This is
and they're
natural
selling?
market phenomenon.
Okay.
Surabhi, you must understand. If you raise the prices, supply will come. Asman se supply aayega. Whether FIs sell, promoters sell, block deal happens, new issuance come, supply will come. So first 3 years, we saw the boom in the demand side because of this inflow. Now you see the what do you call the power of supply.
But does that mean that maybe for an interim there's a bit of a top in the market?
Yeah, don't become too topish. This that.
Achha.
It's a part of the game. See, if you're playing football, I mean, if one guy is Manchester United, other side is Motilal Oswal team, what will happen? They'll just go and keep hitting. Why? There has to be supply. Supply will come, and that is the healthiest part.
Okay.
That's the real role of the stock market. To supply secondary liquidity as well as primary liquidity.
Right.
So my only wish is that liquidity which is taken away from the market, that should have a lot more what you call primary component, like where regulators have said T+3 for the listing. So they are making every single effort to see that money is being raised very quickly in the economy. So that entrepreneurs who are seeking to come in, say typically for the stock market, who comes? The guys who have about say 300-400 crores turnover, 40, 50, 60 crores, 100 crores profit, they only come for the listing. And they have a huge aspiration. A hospital company who has say 1,000 rooms, he wants to set up 2,000 rooms. Okay, come, we'll give you 2,000 crores, 3,000 crores, and you set up 3,000 rooms. And that is what is the chain effect in the tourism or infrastructure or whatever. So so what happens is the equity boom has the wealth effect in the system. And wealth effect has two things. One, it leads to massive consumption boom. Consumption hota hai, then you get the GST. Government gets the tax. Government gets the tax, they are able to spend in the infrastructure much more aggressively. So that's one part of it. Second, if you have wealth effect, then there is a boom in the real estate.
Absolutely.
So the entire real estate,
and we're seeing that,
all over the country, whether it's land, building, flats, houses, everything is 50 to 100% up.
Sure.
That has its own momentum in the economy.
Sure.
So all this put together, I don't know, many more effect would be there, but clearly the consumer confidence is very high, moral is very high, employees are very happy with the ESOP being priced well. So clearly there is a lot of effect in the economy, and that effect from the wealth is going to be added effect apart from whatever capex is doing as per the general budget. So combined these two are going to give us 7 to 8% growth rate, which is what the economists are not getting. Economists are saying 6.5. I mean, they are very reluctant to say even touch 7. All our economists are below 7. But actual numbers is about 7.5, 8. I'm telling you, every single guy will be shocked. If the market remains, market goes from say 22,000 to 24, 25,000 in next 12 months, we might cross 8% growth.
So next 12 months, possibility that we could see even 24,000 plus.
I don't know. You are a better judge. You talk to all the gurus.
So okay. I'm going to come back to some more questions, more viewer questions. This is Praveen Bhandari, and he's saying that how can we expect the market to behave over the next 3 to 5 years, assuming that we get a stable government after the general elections? There's no political sort of accident that happens along the way. So you're very optimistic, and you've answered that partially because of all the factors that you brought in. Let me just add a corollary to the question. The only thing is that we've not had a meaningful correction. I don't know if the one that just happened in the last 2 weeks is that even meaningful. So how do you look at the next 3 years, given the fact that it's been pretty much a nice one-way ride from COVID onwards?
Correction will happen. Don't ask me when and why.
Okay.
But it will happen. It has happened for last 40 years. It will happen again. What will spur that? I don't know. It might be just the supply. There will be so much of supply that every day you are taking $1 billion from the market by block deal. Clearly there will be correction. People will get fed up.
And now government is not even selling. The PSU divestment has not even started.
Yeah, so government should also sell. This is a golden opportunity for them. I think post-election, the new news FM or whoever is in charge, DPM and all, they must sell. If they don't sell, then this is a vested opportunity. Because they must use, by selling 2 lakh crores, they must go and build whatever fancy roads they want to make. Instead of 4 lane, you must make 8 lane roads. But you must sell. So clearly, I mean, see, the overpricing is not a healthy thing. If something should trade at 15p, and if it is trading 35p, see, the person who's holding the stock, he loves it. But it is a completely wrong thing. it is not healthy at all for the market. Someday it is going to collapse.
So correction will happen.
Correction will
but
happen.
back to Praveen's question, he's
Yeah.
saying next 3 to 5 years, what kind of a market are we looking at, and how should we gear up? How should our
So-
portfolios be ready for it?
Yeah. So it is dependent on the fact how the corporate profits move. If a company keeps making losses, it is worth $5 only. Whosoever is buying, it doesn't matter. God comes to buy, then also it is worth ₹5 because it is making losses. So if the earnings, which is say Nifty earnings, let's talk about broad. So this year, our guys are saying that we will earn anywhere between 980 to 990, 975, something closer to $1,000. Next is the forecast. What they can see as an aggregate is about 1150. So they're saying about 15%
Earnings growth.
earnings
Nifty.
growth is possible. And now that could be in reality. I mean, generally things are going better than what they're saying. So it could be 1170, 1180. That as time comes, they will revise. I mean, it also depends on rate cuts and whole lot of things. So, but then trajectory of the earnings is about 15%. My multiple, see, it is P multiplied by earnings. So earnings are, this is the outlook for the earnings. P multiples are pretty rich at about 21, 22. I would say that if it is, say, 20P, so that gives me a minimum of 23,000. And if it is 22, then you can do about another 3,000. So we might end up at 25,000. That is the most optimistic, I would say.
It's the bull case scenario.
It's absolute upper bull side case of, because by the time you exit, you are looking at 13,000 or 14,000 of 25, 26.
And what about bear case?
Bear case could be you can see a complete economy is stagnating. Economy is stagnating completely. I mean, instead of 7, 8%, the moment you say 5%, market will sell out.
If you say just 5% earnings
Yeah, say
growth.
Moody's are saying 6.8%, S&P is saying 7%. So the outlook is clearly, going up and up right now. The momentum is positive, PMI is positive, everything is looking good. Tax collection is very powerful. Every month you get the high-speed data.
Correct.
Tax collections are very strong. In fact, it is beating the government expectations, revised budgetary estimates also. So clearly everything is, right now, there is no reason to say that earnings are going to collapse.
So, okay, now let me put both the things together. You're quite optimistic on the medium to long-term outlook, on earnings, on just the way, the economy is shaping up here. And you're saying don't get fixated on large, mid or small. Let's combine these two and now ask you the question that all our viewers want some answers to. Themes, ideas, the big picture stuff that should reflect in anyone's portfolio who's here at least for the next 5 years.
Yeah, so see, first thing is you should remain allocated. Staying out of market is not going to help because we don't know, as we are talking, market will be up 2% or down 2%. It is that kind of momentum is there. So you be allocated because the long-term outlook is very good. I have stayed in the market for 45 years. I mean, I'm really grandpa of this market.
You started in the 80s, right?
1980. 1980 when index was 100. Sensex was 100.
Gosh.
I have seen index growing by 7, 27, 30 times. Ex-dividend. Come dividend would be almost 1,000 times.
Wow.
So this is a story of this poor country, large poor country. Now we are most populated and we are no more that poor, in the sense that we are in the reckoning, we are top 4, 5 size of the economics. And in power of compounding, what happens is the base is very important. You compound at 9% dollar, but when you compound it on say 100 billion and you double in say 9 years, that is 100 going to 200 billion. But when you compound on 4 trillion, you again go from 4 to 8 trillion. So this is the journey you're going to do. In 75 years, you have done 4 trillion. In next 9 years or 8 years, you are going to go from 4 trillion to 8 trillion. So that is 8 years, that is from 24 to say 32. And 32 to 40, you are going to go from 8 trillion to 16 trillion. I don't have much doubt about this. That is, I'm optimist. I think this much will happen.
Okay.
It has happened in the last 40 years. It will happen in next 15, 20 years also. There is nothing to disturb. If anything, forces are gathering pace to favor India. So my sense is this journey is going to be most exciting journey. Now here, how do we look at things? How do we develop themes? Where are the big trends?
Yeah.
See, you have to find big trends where things are ignored, things are not being fully priced. See, there are some places where trends are right on top of the world. Then you ride, the trends are like, because no trends are permanent.
Yeah.
Trends are for 3 years, 5 years, 7 years,
Sure.
and then it subsides.
Yeah.
Okay, so which are the early trends and where things can be big? Like say like capital markets, I said, it's just 2, 3 years old trend.
Right.
I think if we are going to go from 150 million to say 500 million in next 10 years, I think we have
So there's a long runway
long
ahead.
run, and it's a very consolidated business, mind you.
Yeah.
It's not a very spread out business. When we started in 87, the turnover was 200 crores per day. And there were 500 brokers, they were not able to settle the markets. Today, we are doing, do you know how much we are doing? 400 lakh crores per day,
Total turnover.
total turnover.
Yeah.
And there are only 50 brokers.
So it's a real explosion that's happened in the capital
Explosion, and
markets. Yeah.
it is still growing at 50%.
Sure, sure,
So
sure.
I think we have whatever is digitized, I think it just scales up like mad.
So that's one big theme.
Yeah.
Let me ask you about the themes that are already now about a year old,
yeah.
and get your sense on whether there is more
Yeah,
steam
see,
or not.
should be our talking like this. One thing, I'm not going to talk any stocks.
Absolutely.
Okay, we can talk some sectors here and there, which is known to everybody what is doing well and what is not doing well.
Yeah.
Okay, auto is doing well, capex is doing well, defense is doing well, medical is doing well. So those are the things which are trending very well. But the real fun is buying something which is not trending well right now or at a very early stage, but eventually is going to become very large.
And do you see something like that?
Of course.
So if
no,
you
I
could
don't
share,
have,
not
See,
stock names, but just ideas.
So real estate. Real estate was in dumps, say, 3 years back.
Yeah.
And now they have got up and growing, but still it's the early stage for them. They are repairing the balance sheet still. But this sector, along with the stock market, can become very large because still the housing is not done. And as you become rich, I mean, the biggest growth sector is going to be real estate.
Because you
that's
want
the
to
biggest
invest
industry.
in a house.
So now the issue is that how they use the power of market cap, power of their valuation to speed up their project execution and give better value to their customers.
But what about the stocks? Do you still find value in real estate stocks?
You are the investor, you have to figure. I am telling you the broad trend in the economy, broad trend in the sector. From there you can find some small cap in Chennai or, I mean, every city has their own real estate company. And brilliant guy could be there. So you have to find those stocks and invest in them. Of course, large cap, DLF, your Oberoi, your Lodha, and those things are listed. You can really go and see what is happening there.
Absolutely.
So that sector can be very large. Defense expenditure, infra expenditure, auto expenditure. I mean, actually, when the economy booms, literally every sector participates in that. Someone's like capex is going to be a very big thing as you go forward. Very big means seriously very large.
So, I completely understand where your optimism is coming from, because when we talk to these companies, the managements, they talk about their order books, they talk about the opportunity, they talk about government spending. But just broadly speaking, in terms of how much the market has already discounted, whether it's defense, whether it's capital goods, there is energy transition, power now, I mean, there's so much of even thermal capacity being added.
Your fossil fuel transition, your wind, solar, those things are not even started.
So even in terms of valuations, there's still comfort?
Don't worry too much about why you're so upset about valuation. पहले आप समझो सही क्या चीज value कर रहे हो आप. You size it up. I mean, we cannot size up in this 10 minutes. Every company you have to go and figure out what is the prospect for the company, what the company is going there. Go and understand, stay 2 days with them. Then you'll understand some sense of it, what is there. So markets are not very good in discounting very long term. They are very good, in fact, where they're very excited about the short term. And they have no clue about very long term. No clue at all. And that's why you make money. You see in HDFC Bank or even Infosys and all, you made money back-ended, not in the front-ended. I mean, in 96, 97, it is very clear HDFC Bank is a winner. Or even 2000 it was winner. You see after that what has happened. You got 30% return for next 20 years. How come?
And now?
So now, yes, the story still remains same if you understand. Yeah, I mean, this is a time to really go and do research and figure out what is the future of it. Are they going to lose market share? Or are they going to build on the market share? Because the credit growth or the banking needs of the country is going to grow at 15-16%. So the whole call is if they keep going market share, they will grow 15% plus. 15 ka premium aapko milta hai.
Just one more sector I just want your broad thoughts on is, technology. Now, technology has lots of different ramifications. One is the traditional technology, your Infosys, TCS type of businesses. Then there is the new age internet type of companies. And I know that in your PMS, you own some of them. I think Zomato is a pretty big holding for you folks. And then there are the likes of the fintech, right? Where payments and banking and technology come together, the likes of Paytm. So in this universe, what are you most bullish on?
See, the largest segment is the classical services companies. They are right now little slow after immediate burst of post-COVID,
Yeah.
there were a lot of thought process that everything will be working from distance and everything will be automated and things like that. And a lot of projects came there, and right now they're going through a little slow phase. So this is now it depends on how well you understand what is going to be the longer term future. Is the AI going to cut their number of jobs, or are they going to be new source of, apart from other sources, this is also going to be new source of businesses.
Sure.
That has what has happened. Layer after layer. I have seen when they started, it was more of a staffing services in between 95 to 2000. 2000 onwards, then dot-com boom started. Then ERP boom started. Then all kinds of things keep coming.
Cloud happened, digital
Then
transformation
digital
happened.
transformation happened.
Yeah.
And now AI transformation is there.
Yeah.
So all those things are still on. On top of it, AI transformation has come.
Yeah.
So I think the opportunity size is growing. Every business has to recalibrate and reconfigure and come back. I don't have any doubts that some of the companies will fall by the wayside if they are not able to change. But the ones who are able to change and go on to the mainstream of AI adoption and facilitating the companies or clients adopting more and more and exploiting AI potential, they will do very well. But maybe it is early stage.
Okay. And the internet companies, some of them
Yeah,
that,
so
that
internet
you've
companies, see, internet-driven, internet on the back of any business, say like all this grocery delivery or food delivery, I mean the digital engine which has been put, or on the payment mechanism, you have digital, you have fintechs, you have online digital insurance companies, digital banks are coming. So digital is going all over. So you have to be, see, anything goes digital, and if it is successful in making money, so far the
which
problem,
some of them have now started doing. Yeah.
so the point is that actually our broking industry is the most digital. Right from onboarding to fulfillment, everything is digital. And that's why you're doing 500 lakh crores per day turnover. And that to T plus settlement. And SEBI is promising T plus 0. You imagine nowhere in the world it is possible unless it is digital. So we are most digitized, successful digital business and growing like crazy. So clearly you have to see where exactly the positive impact of digital is there. And obviously, when there is a positive effect, there are some people who are not able to adopt, and there is a negative effect. So you have to be siding with the people who are able to adopt and exploit the power of technology.
Okay, Raamdeo, sir, it's been a pleasure listening into you. But as we wrap up, I just want to sort of take a step back and assimilate everything that you've said. You've had more than a 40-year career in the Indian capital markets. You've seen more than, I think, double of what any of us have seen. So as we look at this wave, where we are probably 2-3 years into this bull market, what is the one lesson that you would want everyone to remember, or the one tip that you'd like to leave us with?
One is don't time the market. It'll always give a lot of jitters unnecessarily. There could be sharp correction, there could be deeper correction. Stay invested. Have faith in this country's future and future of this market. It can give you pain for sure. Nobody can guarantee you a straight kind of thing. But in last 40 years, I have seen when things were not as good as what it is today, things were not looking as rosy in 2000 or 92 and all. Still, it has given 15% return compounded. And you know power of compounding. So better your investors know power of compounding first to really feel the future. Because future you can see only with the past. If past has compounded for 15% for last 40 years, I have no reason to believe to say it will be even 14.5. I would say rather 15.5 because of optimism, but I would say stick to 15 only, or rather consider 14.
Okay.
And 15 means you're saying every 5 years it will double. Every 5 years. So let's leave first 5 years.
That's index will double.
Index
at
will
15%.
double. Of course, then you should do much better as an active participant. So 22,000 will go to 44,000 next 5 years. Let's keep it there. Beyond that, when you say 44 will go to 88,000, Sensex will become, Nifty will become Sensex, then people start finding it crazy. It doesn't get into the head. So first tackle with the first 5 years, and that's a good enough kind of long-term potential of everybody. I would think in 5 years, index should touch about anywhere between 40 to 45,000.
Okay, I think that's a great target to kind of keep in mind, looking at the power of compounding. And I think lots of insights that you've shared with us so that some of that wealth effect shows up in our portfolios as well. Thank you so much for taking out the time and joining us for this conversation.
Thank you
so much.
Thank you.
All right, that's a wrap on this very special edition of Market Cafe. See you again soon. Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates and more.